Maybe not. Okay, if anyone's in from
I think
Kyoto
Ash
Protocol,
is here. I've unmuted
raise your
him.
hands.
Let's see. You have to unmute your own mic, Ash.
Oh,
I've given you permissions.
Inner Ape. Inner Ape, I
Hi
know.
there.
Oh, Ash. Yeah. Cool, guys. How's it going?
Doing brilliant. How about yourself?
Good, yeah.
Going good, thank you.
So are we just speaking to Inner Ape and Ash today? Yeah.
I think Crypto, I think Ken might be in. So we'll find out shortly, I think.
Okay, awesome. Your mic's a bit low there, Inner Ape. I think.
Is that better?
It's still quite quiet. Wait a minute. Let's see if it's my volume. I've got a bit of volume. Yeah. Wait a minute. That should be fine now.
Cool. Ken's in now.
Yeah. Yeah, that's great. Okay, let's. If he's got his hand raised, if he raises his hand, I can unmute him. Oh, Kyoto can. Yeah, he's unmuted there.
Yeah,
Okay.
you guys got me all squared away. Thank you.
Awesome. Right, guys. Yeah, we're just past the hour, so if you're ready to go into the project Kyoto Protocol, I can start the record and introduce you.
Yeah, great.
Brilliant. Thank you. Okay, so we'll start with an introduction then.
I'll just start the recording first. Yeah, I'll introduce you, and then we can go straight into the project.
Brilliant.
Okay, good evening to the Wellcoin Talk community. Today we have an AMA with Kyoto Protocol. Kyoto Protocol is the world's first decentralized multi-layer carbon credit finance protocol, and it'll have a unique first of its kind fair launch Genesis pool Rebase layer 1 token, so we can go into all the aspects of that shortly. But if we could just start with the core team's background and experience in crypto, that'd be great, guys.
Brilliant. Thank you, Glenn. So I'm Ashton, the CEO of Kyoto Protocol. I got involved into cryptocurrency in 2016. I come from a Forex background. I've had multiple businesses within the space. My last business was an OTC, which was one of the first 100 companies in the UK to get temporary asset approval by the Financial Conduct Authority. I've traded large sums of cryptocurrency with clients via OTC, and I've built a network of businesses and users through selling Bitcoin to them since 2016-17. So that's me in a nutshell, and I'll pass over to Frank.
Yeah, hi everybody. My name's Frank. I'm the COO of Kyoto Protocol. I'm an entrepreneur and investor. I've set up many businesses here in the UK. Got into crypto in 2017 when I bought my first Bitcoin. I've been a crypto enthusiast ever since. I've got a professional background in compliance and risk. I've undertaken due diligence programs for on behalf of governments and financial services authorities on layer 1 projects, centralized exchanges, and yeah, that's me in a nutshell, guys.
All right, perfect. And I am Kyoto Ken. I've been in crypto for roughly about 1.5 years, almost 2 years. I come from a stock trading background and business background. I've worked in the space for a little over a year in the on actual projects in the background. I've done things like crypto marketing, community management, brand ambassadorships, things like that.
Awesome. So yeah, if we can have an introduction for investors about the contract. You said it's a unique contract. Has it been built in-house or outsourced?
Okay, so the smart contract that we're using for our Genesis phase, which is a distribution mechanic for our layer 1 blockchain, is effectively a positive rebase token, which Ken is brilliant at kind of explaining. So Ken, if you wanted to touch on the rebase contract, and then we'll go into carbon credits following.
Yes, of course. So for the rebase contract, it is the same kind of positive rebase mechanism that you see in a couple of others where it is an auto staking protocol. So all you have to do is buy your tokens, hold them in your wallet, and you will earn your rebase payments. For ours, it is 916,474% APY, which breaks down to 2.54% daily APR. And that is on 96 rebases a day, paid out every 15 minutes. The way that it works for this one, though, that makes it a lot different is the fact that the rebases actually have an end date. The rebases are not working strictly on, okay, we're going to give out all of this APY, have no long-term plan, continue to pay out these rewards, inflate the supply, and not have an end goal in sight. So for us, it actually ends after 12 months. We're only using it for the Genesis phase. So after the 12 months is when we will actually migrate to the layer 1, and the rebases will stop completely. So there is an end goal in sight. And we also have different things to be able to support the rebase tokenomics. Of course, you would have your basic taxes that most would have. For us, it is a 15% buy tax and a 20% sell tax. The buy side works out to 3% liquidity, 5% towards the buyback and burn fund or the Kyoto insurance fund. It will be 4% towards the Treasury and then 3% auto burn. On the sell side, it is 5% liquidity, 7% towards the insurance fund, 5% Treasury, and then 3% to the auto burn. But we also have a fintech company, and with the fintech company, that will also support the tokenomics with outside revenue. So it's not going to be quite the same as what you are used to seeing from a regular rebase contract. Typically, you only get the money that's coming from the inside. It's spent either towards the buyback and burns or to support tokenomics, but it's only money that's coming from inside of the project that's funneling through. Whereas for us, we actually have outside revenue that will be coming into the project to support it. So it's a different mechanism than what you're used to seeing in these kinds of contracts.
Awesome. So yeah, if we can go into the carbon credits finance protocol, how that works for investors, and it's a 2-token ecosystem, the Kyoto and the KYCR. How do they work together in unison?
Okay, so obviously the Kyoto token is used as a distribution mechanism for our layer 1 blockchain. That will basically migrate over to be a utility token for our network. The KYCR, the Kyoto credit, which is the carbon credit standard, the carbon credit token on our ecosystem, that works within multiple different applications that we build on different chains. So we have a partnership and have received a grant from Near Protocol to build a carbon credit marketplace on their chain. And what we will do with KYCR is allow users to basically yield farm carbon credits, which is obviously, it's an interesting proposition because businesses right now, they have to purchase carbon credits and they basically expend them to offset their emissions. And what we're doing is enabling them to yield farm through basically tokenizing carbon credits and allowing us to aggregate liquidity and effectively giving them an alternative way to generate carbon credits opposed to just expending funds.
That's like I was reading about the liquidity farming. Is that used to acquire? That's going to be used to acquire
Yes.
land. Is that going to be real and virtual land like metaverses, like Sandbox and Decentraland?
No, so no, it's real tangible land. So effectively, what we'll be doing with the Near marketplace, for example, is allowing users to either single stake Near, provide liquidity via LP tokens, and for example, EVM compatible chains, we would route through Curve, Finance, or similar, and effectively we aggregate all of the liquidity rewards and we funnel them into a DAO, and that DAO funds clean projects through our foundation. So we're currently going through the process of setting up in Switzerland right now, and that will basically be there'll be SPVs to each of the projects because certain jurisdictions, you have to have a certain company to fund the clean projects. But yeah, in a roundabout way, we aggregate the liquidity, we fund clean projects that generate carbon sequester, and then we get the carbon credits that have been generated from the project effectively assayed, and then we bring them on chain, and then we distribute them back to liquidity providers.
Can we go into the Kyoto Foundation, how that works? Is that linked to the fintech company, and what fintech company have you acquired?
Yeah, okay. So the Kyoto Foundation is the fintech entity. So that's kind of think of it like the top entity. So all of the layer one blockchains that we're familiar with, like for example Cardano, Ethereum, they all have foundations. Okay, so the foundation for Kyoto is effectively the hub that holds and transacts the projects that we use to generate carbon credits. So Frank, did you want to touch on a little bit of what we're doing in terms of Switzerland and the effect, the rollout of the foundation?
Yeah, sure. I mean, look, ultimately, I think you've touched on it. We had looked at other options as a board, making a decision on where to incorporate. Obviously, a key factor on why we decided Switzerland and the foundation with an operational company, which will be an AG, was because we're going for a raise on the foundation and a fintech raise. So it made sense for us to go blue chip or tier one in terms of how we incorporate in the jurisdiction in which we choose. But yeah, we're well underway with that now. I mean, obviously, it's going to take some time with forming the foundation. The operational company will be set up very quickly. Yeah. It was just sorry, go on.
Go ahead. No, you're okay. Go ahead, yeah.
No, I've closed there. Sorry.
Oh, all right. Yeah, and you're also partnering with the Blockchain Alliance. What partnerships are you building there? And that's around the carbon credits. How's it going to work with the carbon credits side of the project?
Okay, so the Blockchain Alliance is effectively a group of blockchains that support a data-driven carbon credit industry. One key point one thing that a lot of companies are touting the use of blockchain for is carbon credits, because the industry is plagued with fraud right now. And if we could bring carbon credits on chain, which companies are assessing, some companies have gone ahead and tried to do it. Effectively, the Blockchain Alliance is our group of partnered blockchains that we will roll our carbon credit marketplaces out on. So right now you'll see Near, you'll see Kudos, you'll see Rubix, there's a couple more in the pipeline that's coming out. And effectively that is our way of creating a group that's focused on data-driven industries, which is obviously quite important for the next phase of blockchain technology rollout.
It also allows them to lower their own carbon emissions. If you look within the crypto sphere and within the space, a lot of layer ones or blockchains are looking to show that they're carbon neutral, or at least pledging to go carbon neutral or carbon negative. By partnering with us, we effectively allow them to be a partner in the liquidity pools, and through the trading on our carbon credit marketplaces, it allows them to offset. And by being part of that alliance, the incentive is there for them to say, look, we care about the energy that blockchains like Bitcoin create, and we have partnered with Kyoto not only to bring carbon credits onto chain, but it also and make them more accessible, but it also allows them to show how they're committed to making the space greener. So by being a partner with us, yes, we get to roll out carbon credits, but ultimately they get to show that they're serious about their own carbon emissions and how they can clean their chain up and how they can promote that.
So with the KYCR token, is that coming out at the same time as the Kyoto token? And what's the tokenomics and the tax breakdown of the KYCR token?
So KYCR is effectively picture it like similar to like Tether or BUSD, where it's backed to a tangible asset. So it doesn't have a total or a max supply. It is always backed by what we hold in our inventory. We expect to roll out our Near marketplace in 3 months. So we've just recently done our fair launch. And when we roll out the marketplace, obviously it has to have a token to be traded on. So that's when we will deliver the first KYCR. And then effectively the KYCR will contract. It will either, there'll be more in supply or less in supply, depending on who's burning the KYCR, which is obviously, a receipt form of offset because you're taking that out of circulation. And then if we acquire a project that generates more carbon credits, then the amount of KYCR will increase. What that doesn't really have an effect on the value because KYCR is backed by the value of the carbon credits. So the amount in circulation on our platform and ecosystem will not dilute the price because it's backed by a tangible asset that has real world value.
Awesome. And so how does the carbon credits work? Are you approaching like countries or large companies, to offset their carbon into the blockchain in the future?
Yeah, so we're in talks with quite large companies, mega emitters is what we call them, companies that create a large damage in pollution and that have a obligation to offset. We're in discussions with them. But then on top of that, in terms of like carbon credit generation, initially we'll be purchasing carbon credits from the open market to distribute. But eventually, say between month 6 and month 12, we should have our first projects underway. These projects, it'll be like a hockey stick growth because the first few projects will take a couple months to basically go through the process of having an assay, a verification, and then us bringing the assets on chain. But as soon as we start drawing down on aggregated liquidity and yield farming the liquidity that's being placed on our protocols, we should be able to kind of speed that up to the point where we have passive carbon credits coming in at quite a high volume. And then what we do is we have like an offset leaderboard. So it's decentralized and wallet based. So we will onboard companies that are looking to offset their carbon emissions. Now, a lot of companies, if not all major companies, are spending millions and hundreds of millions of dollars a year, if not billions of dollars a year, looking clean and ESG friendly because it's now socially savvy to offset your carbon emissions and look like you're doing great for the planet. What we do is enable businesses to show what they're doing in like a data-driven manner. So companies that offset more, or if they become carbon negative, which I'm a strong advocate for, that will all be seen on the leaderboard, and that gives a social incentive for businesses to offset with us. Not to mention that they can generate carbon offset at little to no cost through providing liquidity. So not only do they save money, they get incentivized through social economic incentives.
Great. And when they purchase the carbon credits, are you offsetting some of their emissions? Is that how it works?
So carbon credits in the industry, they grew 164% last year to it's about $860 billion. And with the market growth, the actual value of carbon credits grew as well. So you as an individual, you're not obliged to offset your emissions, but you can hold carbon credits as a speculative value play because obviously carbon credits are going up in price. Now, the same is for businesses. Now, businesses don't have to burn the KYCR. If they burn the KYCR, that is effectively them offsetting because what we do is we remove the carbon credits out of our inventory and then we provide a transparency report at the end of each trading month. So businesses can either farm them as a speculative value and then maybe expend them in a few months' time, subject to the value that they wish, or they can farm them and burn them automatically and then be placed on the leaderboard. So people are only placed on the leaderboard when they expend the carbon credit, the KYCR. But yeah, everyone has the choice to speculatively hold a asset that's appreciating in value. And the other play for that is obviously we all know the volatility of Bitcoin. We know the volatility of crypto, and right now in the markets, you can tether up or you can move into precious metals through like Paxos Gold, for example. But what we're trying to do is give an opportunity for users to avoid the volatility and avoid the depreciation in price by allowing users to like carbon up, because carbon credits, as we gear up to 2030, with carbon taxes coming in, they're going to appreciate in price. They already have, and they are. This is all information that you can find freely on the internet. And we're enabling users to have a bit of that, because right now it's quite tough to even access carbon credits and hold them as an investment unless you're a massive company that has offset obligations you have to meet.
Great, Ash. And the carbon credit marketplaces, where are you building these? Which blockchains are you looking with the tokens to go cross-chain, multi-chain as well in the future, and offer carbon credits on different blockchains, or just the one?
Yeah, no, so it's going to be multi-chain. So obviously our first one's going to be near protocol, and then we've got partnerships in the pipeline that we've not announced, and we've also got partnerships that are visible through our socials. And each partnership you see, there'll be either a yield aggregator and an option for people to offset and trade carbon credits on that chain. And that's what makes us unique with our rollout plan, because carbon credits need to be more accessible, and we understand that each blockchain has its own community. And now, communities, whether they pollinate between blockchains, we want to give businesses that are building on native chains the opportunity to access, farm, and generate carbon credits without leaving the chain. And that's why we're forming the Blockchain Alliance. So in a roundabout way, we've circled back to the Blockchain Alliance, but whatever you see on the Blockchain Alliance, there'll be a carbon credit marketplace for our ecosystem, and then we will roll out the mission.
I think you sold out your fair launch in a couple of minutes. What sort of stage are we at for investors to get involved with Kyoto Protocol?
Okay, yeah. So we sold out our fair launch in 9 hours. It would have been a lot quicker, but we had issues with the DApp, and it was the largest fair launch on BSC to sell out. It sold out in under 9 hours. It was $2.375 million. And to get involved into Kyoto now, I think we're hovering at about a 2x from fair launch. But yeah, you go onto PancakeSwap or BogSwap. Our token address is obviously in our Telegram. You just have to do a / command. We're also on Discord too. So yeah, we're freely available to purchase via BNB on either PancakeSwap or BogSwap.
So is that the Kyoto token? Is the KYCR token launched as well? Or are they both in the same time? Or?
No, that's the Kyoto token. So the KYCR will be available in about 3 months' time when we open our first marketplace. The first amount of KYCR will basically be distributed to Kyoto token holders as a way of giving back to our community. And then those Kyoto token holders can then take the carbon credits that they've been given and either trade them, offset them, or hold them speculatively as a value play. But there's always an exit point on the marketplace there.
Are you looking to launch the KYCR onto central exchanges in the future as well?
Yeah, and so Kyoto, so both really. So Kyoto, the Kyoto token cannot be listed on centralized exchanges right now because of the hard-coded taxes and the way that it works with DEXs. But as we roll out to our layer 1, you'll see them on centralized exchanges. And we're already in talks with a partner in the UAE that's got an exchange to list KYCR. And we're in talks with other platforms to basically list the carbon offset standard. We are also, we're aware that some people only really trade on centralized exchanges. So if we do build KYCR on our own marketplaces, which is where we're trying to incentivize people to trade and effectively interact with carbon credits through the leaderboard, we will give the opportunity for users to acquire through centralized exchanges, but that will probably be months 6 to 9, opposed to immediately through our own marketplaces.
Okay, great. And with the Kyoto token, do you have a treasury attached? I think you're planning, is it going to be a governance token with voting rights for investors in the future as well?
Yeah, so the Kyoto token has a treasury right now. The treasury is obviously a part of the Rebase protocol. As we progress to our layer 1, we're going for a $25 million raise on the fintech side. We've partnered with a few VC funds pre-raise. We've also got Michael Gord, the CEO of GDA Capital, on our team. And that 25 million that we raise is effectively a war chest for the layer 1 protocol. We are going to do yield farming on different protocol tokens. A good proportion of it's going to be stable tokens because obviously we need to protect downside risk. But yeah, the the actual Treasury itself will be there to support the protocol through getting pledging liquidity on different protocols and sustaining our own effectively.
And with the Kyoto token, can you do locked, unlocked staking? How does it work for investors?
So, yeah, the token. If you buy Kyoto tokens and you store them in your MetaMask or your Trust wallet, you effectively get your payment every 15 minutes. There's no unlock period. There's no there's no vesting period. You can come in, you can buy on MetaMask, buy on PancakeSwap, store in your MetaMask. You can sell the next minute if you wish to do so. So yeah, there's no lockup period there.
How are you controlling the inflation with the Kyoto token? I know you've got a burn pit, and the Kyoto token liquidity generator, I think, supports that.
Yeah, okay, so that's a good question, and it's a traditional way of looking at rebase protocols. The reason we're using this positive rebase protocol is basically to distribute our layer 1 tokens. There is going to be a dilution phase. I would ask for Ken to come up and kind of describe, what the worst case scenario would be in a year's time and how a user would benefit at this stage, because it's still very early. We're less than a week post fair launch. So Ken, if you could come up and basically give a rundown of a drastic Kyoto price in year 1, and then I'll tie on how we're countering the dilution.
Yes, of course. So yeah, for the dilution purposes and for controlling supply, of course, that comes with burns as well. And with having 3% burn per transaction, that's just the start of it. You can also look and see that we bought back roughly, I would say, about $140,000 worth so far, and those tokens have been subsequently burned. We also have 5% tax per buy, 7% tax per sell that goes into the insurance fund, which is used for buyback and burn. That would be, of course, on top of the 3% per transaction that's hard coded into the taxes. So that's one big part of it. But when you think of a drastic price difference, so say, okay, it was $15 per token at fair launch with 0% buy tax. So going through the fair launch, you would be able to get your tokens $15 even and not have a buy tax. If you go through 12 months and say that the price drops even to, say, 25 cents, which is pretty much the number that we are basing our valuation for the company at migration, we're basing it on a 25-cent price point. So if you look at a 25-cent price point, if you have one token from fair launch, at the end of 12 months, it would be 9,176 tokens. If you multiply that by 0.25 for 25 cents, you would have roughly $2,291. So even if the price was to get to, say, a 25-cent price point after 12 months, one $15 token from fair launch would have a value of $2,291. That would put our market cap at roughly 600 million with the inflation. So then for the people that would say, okay, well, 600 million sounds like sounds a little high. You guys may not be able to get that. So you can actually take that number down, and you would be able to take that number down to, say, even 5 cents per token would put us at roughly a $120 million market cap. That would still give you a 30x from fair launch. So even for what we look at as more of the worst case scenarios, what the bottom line goals are in our head would still be a 30x. What we plan to achieve is at least a 25-cent price point, which would be about an 150x. So there's a couple of different ways to look into that. One of the ways to look, and one chain that we've looked at pretty closely, is the Phantom Network. If you look into Phantom Network, you'll see that they have a max supply of about 3.5 billion tokens. They have a circulating supply of about 2.8 billion tokens, and they have a price of about 28 cents. So that's roughly where we're looking at for our layer 1 migration. And looking into it that way, we plan to bring in somewhere between about 2.4 and 2.6 billion tokens into the layer 1. And that would, of course, be with the inflation after 12 months. So that would be right about what we're looking into price-wise. which would be somewhere roughly between worst case scenario is about 5 cents and what we plan is about 25 cents. And that would put you between that 30 and 150x even at that price point. So what a lot of people do when they buy into Rebase tokenomics is they buy in early, they wait until it gets the big pump and they sell out. So say even we were to get, say it took us 27 days. Every 27 days is when your token supply will double. So say it took us 27 days and we got to a $300 price point. That would give you a roughly 20x. Even waiting 12 months at a 5-cent price point would be a better payout than that. If you were to hold and we were to say get to the 25 cent, then that would be 150x. So the short-minded site in the Rebase tokenomics is where a lot of people are, because a lot of them don't have utility that they're going to bring. They don't have a real vision for the long term on saying, we're going to bring you this, this, and that to get you to hold on long term. We've already started from the beginning before even the fair launch opened with utility and with a long-term vision. So the people that sell off really, really quickly on the first, 2x, 5x, 10x, they're actually damaging themselves, to be honest. So that's why we're bringing the long-term vision of showing people that even at a $300 price point after a month would be less money than a 5-cent price point after 12 months.
Yeah, I would just like to jump in and close that off by saying the 25-cent price point was done with me and the CFO when were preparing our business valuation for the raise. And what we had to do is be extremely conservative. So, we didn't want to come in with a valuation when we're going for a raise saying it's $2, $4, $5. We put 25 cents so that it was actually very conservative. So if you take what Ken has just mentioned there, and say that 25 is worst case, or indeed what he said with 5 cents, obviously with the way that we're going with outside revenues, we fully believe that we're going to be higher than that. It's just, it gives you a good overview of through business planning and how we've built out our model, that if you held till the end of the 12 months and we go over to a layer 1, you've got a big bag of tokens for a very reasonable investment if you were to get in now, or if you got in on fair launch. And I think it's just trying to educate and get people to change that thinking from, right, I'm in, we've got, CMC, the marketing's in full play, 3x, I'm out. And yes, you get that short-term gain, but if you don't see outside the vision of what we're bringing as a project, then I think you're going to miss that upside potential that Ken described.
Definitely, yeah. You're building a lot on the Kyoto protocol. So in 3 months, you've got the KYCR token as well. So Kyoto token holders and investors will be able to get first into the token there, and then after 12 months, like you say, when you move to a layer 1, so it's a long-term sort of hold advantage for investors. How will it work for Kyoto investors? Do you have to hold so many tokens to get into the KYCR launch?
So the KYCR distribution, we're actually announcing in due course. Obviously, with the run up to our near marketplace, you're going to see more of a marketing effort towards the near community, and obviously how we're going to distribute KYCR. So yeah, that will be released in due course.
Awesome. And has the Kyoto token been the smart contract been audited?
Yep, so we've received an audit via Certic, and we're currently awaiting the KYC, which should be imminent. So we'll do that. We've got the Certic audit and Certic KYC.
Great, that's the gold standard for for smart contracts. And what's the marketing plans going forward? What are you looking to do in the first quarter with the Kyoto protocol?
So yeah, marketing is obviously a key focus. We've got social media marketing through Twitter, YouTube, the standard platforms. Ken, did you want to touch on the marketing with Frank there? And I'll tag in because you guys are kind of fronting that.
Yes, of course. Yeah. So I mean, you'll see a lot of the same things that a lot of people are gonna go for. PooCoin ads, DEX Tools trending, Crypto.com trending, CMC listing, hopefully CMC trending as well. But then, of course, we will also have the social influencers, as Ash stated, YouTube videos, Twitter marketing, things like that. But I think one of the things that'll really set us apart from others is having these partners already and working with these partners closely. Is we will have upcoming fireside chats, AMAs, things like that, that will be co-branded with our partners, where we will both attend, to where we're able to kind of mesh our communities together and be able to actually work with them. We don't like the term partnership as a lot of people use it, because they use it very loosely. They just kind of say, okay, we're going to promote each other and say we're partners, but you don't really see anything coming from those two sides. It's kind of just a piece of paper, in my opinion. So we are taking a different approach as to where we will actually use the partners. We will be, publicly stated with them. We will do fireside chats, AMAs, things like that, to actually capitalize on these partnerships and be able to do that together, instead of it just kind of being a logo on our website and then you never hear anything again.
Awesome. I can open it up to the rest of the team if anyone's got a question for the Kyoto Protocol core team here. Go ahead.
Yeah, hey Glenn, I've been listening in, and this is a super unique concept. I've not seen anything like it before, and yeah, it's exciting with the carbon credits and allowing probably anybody to get involved, trade them, hold them, whatever you want. But the most exciting thing for me is the businesses that you're going to be onboarding to the ecosystem. So I'm curious to how large would these companies be, and how much carbon footprint would they, I don't know, on average need to offset. See, I'm trying to sort of like evaluate the probable influx of capital that's going to be coming into this marketplace that you're building.
Yeah, that's a really good question, and I'm probably going to team up with Frank to answer this. So, obviously, we're in discussions and have been in discussions with large corporations, large shipping companies, also airlines. We've had warm discussions with them, and we've also had warm discussions with very large building projects that have to be carbon negative. One of which was in excess of $4 billion, £4 billion, that was basically exploring avenues on how to generate carbon offset. So, yeah, in terms of like large institutions, we have a very good network inside our core team, and we've already chaired discussions and spoke about viability. So yeah, we're looking for large institutions, and actually we're also looking for businesses and even the small guys that want to do something good, to either generate carbon offset and burn them themselves, or effectively generate offset. So Frank, I didn't know if you wanted to add on there, if I've left anything behind.
No, I think you did a good job of going over, the people that we're talking with and the people that we're targeting. I think there's two key things that I would add. One is, carbon credits are essentially a tax that corporations have to pay in order to offset the damage that they do, and ultimately to help battle climate change. Now, the way that they look, I guess the world as a whole, or governments as a whole, are trying to enforce this is by making them pay these taxes and pay for carbon credits in order to offset themselves, to say, look, you are responsible for this through your business. Take an airline, for example, a shipping company. We've worked out your revenues. We've worked out what your offset target should be. And now we're going to enforce via legislation that you must pay these taxes. Now, I think if you look at that as a market, then carbon credits are bullish immediately. There's legislated buy pressure on carbon credits enforced at government level. Now, if you take that and say, what are we trying to do? We're using DeFi, that we love, decentralized finance, to pull some a corporation's money, and then rather than them putting in stables and getting back a coin, or putting in BNB and getting back stables, or whatever that farming or liquidity pair is that I'm sure you're aware of many, we're saying stake your funds, and we will offset you. with carbon credits to help you with that damage. Okay, so we're effectively giving them a way to offset at little to no cost. So they just have to pledge liquidity like we do when we yield farm. Now, when you look at what that potentially means is, I'm pretty sure there is not another option out there that allows a corporation to offset these taxes at little to no cost. And we've looked at other industries that allow people to, they're warming up, they're ramping up now, 18 months into the future to say, right, in the first year, I think our tax is 25% of the value. And then there's a tiered scale, 25 to 30 to 60 until they get to 100 over 3 years, say, for example. What we're doing is we're coming in at exactly the right time that we need to and giving them a solution to not only offset at little to no cost, but the value proposition is that they will now be cheaper than their competition. The other options that are available out now for them to offset is to take that capital, give it to somebody else and say, go and plant trees for me. And they never see that money again. What we're doing is using a liquidity pool or yield farming, however you want to describe it, and saying, look, lock that capital to 1, 3, 5 years, and we'll offset you for little to no cost. And look at all of the benefits there. So when you ask your original question, what companies are we talking to? Who have we got to get lined up? If you look at, as I've just described, they're going to have to buy these, and then we can make them cheaper and we can save them money. It's really, a no-brainer, I guess, to say, why wouldn't you work with us? And it's going to take time, right? Because DeFi is there and it's new but the people that we're talking to in terms of corporations, they're all ears. So I rather than the people that we're talking to, I would say, look, let's look at how big that market is. Let's look at what our value proposition is to these clients and how we can save them money and make them more cost effective and ultimately be cheaper than their competition. So I'd approach it the reverse and what we can do to help and why they would be interested.
Yeah, I think they would be interested a lot because, well, instead of just paying the money up front to the government or to the governing bodies like this, they can basically just lock away some of their funds and get free offsets. So it's a win-win for you and for them. You're getting huge amounts of liquidity locked into your protocol, and they are getting a carbon footprint offsetting. So it could be a really strong symbiotic relationship. It sounds super exciting for me. And yeah, I thought at first that some of these companies might be in the hundreds of millions, but I think we're talking of companies that are in the billion valuations. So yeah, the influx could be really impressive. And yeah, it sounds super exciting, guys. Yeah.
Brilliant, thank you. We think so.
I just want to add as well that sorry, Frank. I just want to add as well that if the carbon markets grow half of what they did last year, the carbon credit industry will basically surpass the total market capitalization of cryptocurrency as a whole. So that should give a market vertical to kind of assess what liquidity is there.
And yeah, there could be, it could rise a lot more than last year with the energy crisis. I think the carbon credits boom could explode, especially for Europe, because I've just noticed today Germany's having to bring 2 coal plants back that have been mothballed. So there's an energy crisis for this winter, and yeah, so it could just accelerate carbon credits going into the winter this year, definitely. On to investor questions. Let's see. Syed, you had a question for Crypto Protocol core team here. Go ahead.
Yeah, thank you, Glenn. So you are planning on developing your own layer 1 blockchain. So I want to know that what consensus will you be adopting for your blockchain, and how will it be more energy efficient as compared to other blockchains?
So we'll be opting for a proof of stake authority, similar to the consensus of Phantom. We are in discussions with our partner technology partners, sorry, 2 words of partners there, but we're in talks with creating something that's more custom with the Blockchain Explorer assisting more of a carbon credit backend. But yeah, so it'd be proof of stake authority, which is highly energy efficient. To give it put it in perspective, not to keep mentioning Phantom, but the Phantom whole ecosystem used the same energy as 1 US household last year. So it's incredibly easy to offset.
Yeah, not to
Okay, got
mention
it.
that was also with an average of roughly 750,000 transactions per day. And for the entire year, that blockchain used the same energy as one US household.
Okay, okay, got it. So you mentioned that you will be buying these carbon credits from the open market. I may have missed the part, but I want to know that which funds will and up to what percentage will be used for buying these carbon credits off the open market.
Okay, that's a good question. So the initial carbon credits that we purchase off the open market, we will be releasing a statement on the total volume. We are going for a $25 million raise, which we've had great interest in from partner VC funds. And effectively, the carbon credits that we hope, well, past the point of acquiring on the open market, we hope to generate carbon credits because just purchasing carbon credits doesn't really solve the issue. You know, we need to be able to sequester carbon. We need to be able to put that data on chain. So to answer your question, yes, we will be purchasing off the open market initially. However, moving forward, we are looking to generate our own carbon credits and then basically distributing back to liquidity providers because, you know, just purchasing the asset doesn't solve the issue.
Okay, got it. Thank you for explaining that. Thank you so much. Over to you, Glenn.
Thank you for the question, Syed. Let's move to Aisha. You had a question for the Kyoto Protocol team. Go ahead.
Yeah, thanks, Glenn. Okay, Kyoto Foundation is also planning to carry out planet-saving reforestation work globally by acquiring land, planting trees, and investing into clean carbon technology. Can you briefly tell us more about reforestation work that you are planning on by acquiring land?
Yeah, so obviously each project is unique in its own right. You know, a keen interest of mine is preservation. You know, when I initially looked to starting something towards sustainability, it was in the interest of preserving ancient woodland in the UK because I have an interest in mycology and preserving certain fungi. But in terms of like reforestation and replanting of habitats, I suppose that's what we're going to be releasing as per each project. Every project is different, and every project, you know, during the acquisition process, we'll have a full transparency report on what we plan on doing with that project. So, you know, the reforestation is effectively in a nutshell. However, our partners specialize in renewable energy. Nickel have projects all over Europe, solar projects, which obviously generate carbon sequestration. So it's a good question, and it's a question that we should be able to answer very soon in terms of what our first project is. But in terms of carbon sequester, it's about you know, how much can you generate? What's the standard of carbon credit, and what's the return on investment for the actual project? Because if we are investing into reforestry projects, obviously the return on investment is not going to be great if you start purchasing in you know, massively expensive areas. However, we're not looking to purchase in areas that you know, have a real bad quality of tree or not going to have any forward life for the trees after the carbon credits are kind of generated. So great question, and I suppose you're just going to have to stay tuned on our socials to get more information on that.
Yeah, wonderful plans you guys have. And thank you for appreciating my question. So another question I want to ask that will the Kyoto Foundation governed by the DAO, and will community members also be able to participate in DAO voting process?
Yeah, so the Kyoto Foundation right now is effectively the holdco. So the Swiss entity that we're setting up is the Kyoto Foundation. We do aim on bringing in voting mechanics, but right now, as we're going for a raise that's VC backed, it's very difficult to propose DAO voting or DAO governance when you're going through that aspect because they want to understand that you have control. But as we migrate over to a layer one blockchain, I would absolutely love that because I'm about decentralization and I prefer projects that are community owned. So yeah, that's another good question. But I would say that that's more for the layer one.
All right, understood. Thank you. Thank you for answering.
No worries. Thank you.
Thank you for the questions, Asia. Let's move on to Venice. You've got a question for the Kyoto Protocol team here. Go ahead.
Yeah, thank you so much, Glenn. Actually, I was wondering which country or which place will be your first priority? Where will you acquire land to plant trees on it? And also, do you plan to onboard any volunteers belonging to different parts of the world to help you in achieving your mission of reforestation?
Okay, that's another good question. So we've in terms of like projects and the jurisdiction, that will be down to what land's available and what project that we can invest in that has a good ROI to our user base. In terms of actual jurisdiction right now, we've not confirmed. We're looking at South America, we're looking at Europe. So it's quite a broad map at the moment, but as we move closer to the time, and this will be post marketplace, so you're looking at around 6 months from now, the first project acquisition. And right now we're just working out exactly what the return on investment would be, what the structure is needed, the compliance that's needed, the SPV that's needed, the company that's needed to be set up, the finance and set up, because not every country allows you to acquire land as a foreigner, and then you have to comply with other regulatory compliance. So yeah, it's a very forward-looking question, and I like it because it's a challenging one. But in terms of the answer, we can't confirm on the jurisdiction right now because we're assessing multiple avenues.
Okay, that's awesome. And any plans to onboard volunteers with you for achieving your mission of reforestation?
Warranties, could you please elaborate?
Yeah, if some people want to help you in achieving the mission of reforestation, or if they want to help you in planting the trees on the lands you acquire or you will acquire in the future.
Oh, okay. That's a really good question. So there's two answers to this. Okay, so we've recently just partnered with Veritree. Veritree's planted the Cardano forest in Kenya. I think they're aiming to plant 1 billion trees in the next 2 years. I think they plant hundreds of millions of trees each year. We're looking to help provide liquidity to their projects. They don't predominantly generate carbon credits, but actually they do make a great change and a great difference. In terms of users coming to help and actually being able to earn a monetary value, that's one of the reasons why we set up in the first place. We had a very early conversation with a government in Africa, or a governmental body in Africa, that were effectively looking to plant trees. And one way that we could reward users that don't have a bank account in areas that people are unbanked, we would effectively pay them via a Web3 wallet to go and plant trees, which is great because it gives people who don't have an opportunity in life to join the banking system to earn funds, and effectively, allow them to come into a Web3 world where there's a lot of opportunities.
Okay, that's really awesome. And once I read about a project that were selling the carbon credits in the form of NFTs. So I was wondering, do you also have any plan to sell the carbon credits in the form of NFTs as well on your marketplaces?
Yeah, again, that's a good question because it kind of touches on regulatory compliance. So the reason that they use the NFTs or they fractionalize them is because it bypasses the security law. There was recently a massive court case in China about NFTs and how they can support the use of cryptocurrency, and it was brought forward that NFTs are effectively a reason why cryptocurrency needs to remain legal. Now, the clever reason to use NFTs to fractionalize carbon credits is you can create, say, an NFT forest, and then what you can do with that is fractionalize tokens to that NFT. So if that forest generates, say, 5 million tons or whichever it may be, you can fractionalize that NFT to 5 million tokens and then do it that way. When we launch the KYCR, we are going to ensure that we're regulatory compliant. whether that's through NFTs and fractionalizing the tokens, or token issuance but restricting countries, which obviously we don't want to do. And more information will basically be released on that as we run up to our marketplace.
Yeah, that's really awesome. And one last thing, I want to know that I was wondering, how will you make the local agricultural producers understand about the blockchain or about your carbon credit marketplaces, that they can buy or sell the carbon credits using your platform? Because there could be people with very low education or very little knowledge about crypto. So how do you plan to tell them or convince them to use your marketplace for the carbon credits?
Yeah, that's a good question, because not everyone understands Web3, not everyone understands blockchain technology. Our partners at Kudos have actually invested a lot of time and energy and money and resources into educational programs in Africa, and we're fully supportive of that. And what we don't expect users to do, especially if they're unbanked, is be paid in a carbon credit, because what can they do with that? What we would look to do is work with companies that are already looking to offset and meet the obligations. We would then take the liquidity and either pay them in a stable coin or a cryptocurrency of their choice to what they do. So it's that's my vision, and my goal really is to get to the point where people who don't have an opportunity to earn income or have a bank account effectively have a way of earning income through planting trees. And we're going to try and do it so they don't have to hold a carbon credit. They can just get the monetary value, do the work, and have something to feel good about too, because everyone loves doing something good for the planet, or I hope they do.
All right, that's really, really great. You guys have really great plans for making the world a better place. I really like it, and thanks so much for answering all my questions. Thanks.
No worries. Thank you very much.
Thank you very much for the questions, Venice. Some great questions there, yeah. And I'm wondering, with the land you're purchasing, are you looking at the sustainability and the areas you buy it with the climate crisis over the next 10 years? Coastal erosion, rising seas. I think Australia, in 2020 lost over 10% of their forested area as well, with the terrible bushfires over there. Yeah, so, and on the land, are you looking to put maybe solar and wind as well as planting trees?
Yeah, so obviously renewable energy is a key point for helping against climate change. 300 million homes are going to be displaced by 2050 by climate change alone. A lot of the borders are going to be completely displaced to what we're used to seeing. A lot of countries are actually going to be underwater. And that's because of a compound effect of the damages that we're making right now. If we do not stop or try and reverse or halt what we're doing, the effects that's going to occur between now and 2050 is going to be quite drastic. If you take into consideration not only the fires in Australia, the fires in California, the floods in Germany, erratic weather changes across the world, it's a telltale sign of what's happening. And what we're trying to do that's different to other companies that are saying come and offset with us, come and be green with us, is give a monetary incentive for you to do so. One thing that made Bitcoin so popular in its rise, demise, and rise again is effectively the headlines of people making money, the price appreciation, and the monetary value. That's what's attracted people. And carbon credits, you don't have to do anything with them. You can hold them as an investment. But what we're saying is interact with our ecosystem, stake liquidity, pledge liquidity, generate your own offset, or sell the offset that you generate to companies that are working with us, and then look onto our leaderboard or our social pages that basically show the companies that are making a difference. And these are the companies that are not afraid to show what they're actually doing. Many airlines, shipping companies, large institutions, they all have TV adverts saying that they're planting trees, that they're doing this, they're doing that. What we're saying is remove all of the facade, remove all of the advertisement media, and put it to a data touch point, and let's see what you're doing. And we're not expecting you to pay any more. We're actually giving a financial incentive for you to interact with us too. So very long way of answering your point there.
Yeah, the next 5-10 years is very important for the planet. Definitely. The IPCC only said this year that they're expecting in Africa 150 million people with water shortages and 500 million people displaced. So that that comes true. It's quite scary, but yeah, hopefully we can sort of get our act together around the world, and definitely carbon credits is supporting that. So it's been great speaking to you today, guys. Unfortunately, we're running out of time. For investors as well as helping the planet. Obviously, you can make a great APY on the Kyoto token, and then you'll be able to invest early in the KYCR token as well. And then you've got the layer one blockchain in the future. So it's been well planned out. It's unique. I don't think anyone else has been doing carbon credits idea for the blockchain. So it's been great for our investors to listen to you guys today. As we always say, though, for World Coin Talk community investors, AMAs are for research and educational purposes. It's not financial advice. You can check out their website, white paper, and official socials in our main chat. And if anyone's got a question after the AMA, like I say, the socials are there in our main chat. I'm sure they can answer questions in the Telegram or Discord. Thank you very much for coming today, guys.
Brilliant. Thank you very much.
Pleasure. Thank
Okay.
you.
Thank you for having us.
Thank you for coming, guys. And I think we've got spin the wheel for 2 lucky winners, $50 each. Fact is there.
Yes, I'm here. I have the wheel. It should be coming up on the screen here. Let me know when you can see it so I can spin it around for 2 lucky winners. It should be coming through now. Okay, let me spin it once. And I'll grab your IDs and we'll post the winners in the chat. We'll just contact you guys for your wallets after we close up the AMA here. And okay, let me spin it one more time for this gentleman or lady. Congratulations. Let me make sure I got your IDs. I got it now. And there we go. Okay, we should be good now. Yeah, thank you everybody for coming today. This has been really awesome, and thank you to the Kyoto Protocol team for agreeing to come on. This has been a really interesting one. Like Glenn mentioned, we've not seen anything like it, so it could be a really unique opportunity for everybody. And we do have the chat still locked, so the socials are right there. Make sure you engage. Make sure if you've heard something you liked, maybe dig a little bit deeper. I'm sure they'll be more than happy to answer any and all of your questions. So thank you everybody for coming today. This has been great.